Okay, so continuing from where we left off, we looked at the ordinary share capital and how to calculate that final amount. Now we're going to look at retained income. So before I even go into this information of retained income, I want you to know your format and how it's supposed to be. So you have your balance on the beginning of the year, then you have your net profit, as per income statement, and then you have your repurchase of shares. Remember, we bought back shares, and an amount from that repurchase had to do with retained income. Right here, this amount here, the 165,000. Right, then under ordinary share dividends, we have two here. We have interim and final dividends. Right, then that's your format of retained income. This will never change. Right, if you never repurchase shares, then nothing comes in here. When you issue shares, it only goes to ordinary share capital. The same way, this format would never change. The only thing that would change is you adding one line here for issuing new shares. When you issue new shares, sorry about that. It will only change when you issue new shares, right? You're adding another line item, but besides that, nothing else changes. Retained earnings, if you don't repurchase shares, this line doesn't exist, but everything else stays the same, right? So continuing, let's go back. Net profit, we need to find that, and then they've given us our balance. Let's put in our repurchase amount, right? So repurchase amount is 165,000 rand. Now this amount, remember, you are repurchasing shares. It's money going out of your account, so we have to put it in brackets to show that it's decreasing. Then net profit, let's go to this, the balances here on the extract. So we have retained income at the beginning. They've given us bank, loan, trading stock, debtors, creditors, income received in advance, sales income tax, and dividends on ordinary shares, interim dividends. So we need that also. That 630 rand of ordinary share dividends, 630 there. 1, 2, 3, like that. So what else can they tell us here? Only final dividend of 22 cents per share was declared on 30 June 2017. Let's look at our timeline. Remember, when does our year end? 30 June 2017. So they declared this at the end of the financial year. All right. Only shares in the share register qualify for dividends, meaning that here we bought back shares, right? We bought back shares on 1 December, meaning somewhere around here we bought back shares 1 December. So the shares that we bought back, we don't pay that client dividends anymore, because we've bought back those shares. That client, that shareholder does not own those shares anymore. If we had paid dividends around here, then that client would have gotten their share of the dividends, right? They probably got their share of dividends from the interim dividends, right? But now we're going to calculate based on the new balance of shares. So what is our new balance of shares? Be sure to take your 4,140,000 and not instead your 4,200,000, right? That's why the timeline matters, for you to understand when when things happen in your books. So we're going to say 4,140,000, 1, 2, 3, multiplied by, how much is one share? One share is 22 cents, right? Remember, this is our final dividend. 22 cents, comma, 2, how much in final dividends did we pay? 910,800 there, right? So 910,800, and then our total there would be, when you add these two up, remember you have to add these two up, and then the answer that you get, you put it right there. So it's going to be 1,540,000. 1, 2, 3. Now remember, dividends, you're paying it out. You're using the money that you got, the profits afterwards, and you're going to pay it out to your shareholders saying thank you. So it's the equivalent of interest. If someone puts money in the bank, they get interest. But if someone puts money in your business and trusts in your business, they get dividends. So because of that, we are subtracting the dividends here, also in brackets. Now, the only thing missing here is net profit. Let's see how we are able to get our net profit, right? The following adjustments have not been taken into account. This is concerning provision for bad debts and insurance, right? We can skip through that. The loan statement, we can skip through that. Information F, income tax for the year amounted to 408,800. This is calculated at 28% of the corrected net profit. So you're supposed to calculate your net profit, the one that you're supposed to put in your retained income, given your income tax. So how do you do that? Income tax is 408,000. Supposed to use 408,000 to get your net profit. So this is how it is. When you look at your income statement, you're gonna have all your line items up there, all that good stuff. Then you have your gross profit, right? Or it's gross operating profit after interest, or gross operating profit before tax. Then you have your income tax. Then you have your net profit. Now, here's the thing. Income tax is calculated on gross profit, right? So what you're going to do is you're going to say gross profit, whatever this amount is, multiplied by the income tax, which for companies is 28%. And then you're going to get your income tax. So if we're going to give it percentages, and this is the general rule, gross profit is 100%, income tax is 28%. Now whatever amount for gross profit you have there, you're going to subtract income tax to get your net profit. The same way with the percentages. You have 100% gross profit, you have 28% income tax. You're going to subtract the income tax from the gross profit to get your net profit, which is 72%. That is your net profit. But now, how does this relate to us getting net profit using the income tax? I'll show you, right? Income tax is, as we agreed here, where did that go? As we agreed, income tax is 28%. Let me do this. Income tax is 28%, right? That's income tax. Now, there's this thing where it's X representing what you have multiplied by what you want as a percentage divided by what you have as a percentage. Now, I'm going to show you. 408,000 is what we want. This 408,000 they told us is income tax, meaning that it represents 28%. So we're going to say multiplied by 28% over, what do we want? we want net profit. Net profit is represented by 72%. So it's going to be 72, oh no, sorry, 72, oh, okay, 72%, right, over there, right? Then we're going to multiply that and we're going to get our net profit of 1,051,200 rand. That is our net profit, right? Now, maybe you don't believe me. Maybe you think I am just speaking a bunch of waffles, right? We can test this out. We're going to use this same thing, but instead of looking at net profit here, we're going to look at the gross profit. Then we're going to subtract all of them to get the same answer here for net profit. So same thing, 408,123 multiplied by what we have, what we want. Sorry, yeah, this was upside down. So it's what we want, which is 72%, over what we have, 28%. The answer is still the same. I just calculated it on the side. I just mixed those two up. So what we want is 100%. What we have is 28%. Now we calculate that one. 408,123 multiplied by 100 over 28%, and that is 1,457,140. Can say 143, right? Then we take that 1,457,143 minus 408,123. No, it's not 408, it's 408,800. Sorry, 408,800. Right? And then this answer is different then. Yeah, because I was having doubts there because that didn't look right. 1,460,000, 408,800. So here, just to double check and show you, here they've given us 408,800, not just 408. So it's 408,800, and then it's 408,800, and then there we're gonna say 1,460,000 into 3 minus 408,800, and then do your calculations there. Minus 408,800 equals to 1,051,200, which is the same as the answer that we have here for net profit, right? So that just goes to show that this example of what we have over what we want actually does work, right? So just to put it in our calculation here, 1,051,200. Then now we add and subtract. So it's going to be 1,051,200 minus 165,000 minus 1,540,000, and that will give us 219,400. Right? Now these amounts here, as much as you'd get your 11 marks here, remember that the bigger picture is for us to solve our balance sheet here. So remember that these final amounts is us saying this is the amount that should be reflected in the balance sheet. So it's going to be here 219,400, 219,400, and for ordinary share capital 3,105,000, 3,105,000, and you are done. Right there you have 19 marks. Once you get a hang of it, it won't take you as long as I did, because I went explaining and I did a few mistakes there, but that is it, right?